Good morning, traders and investor. Roger Scott here, senior strategist for The Trading Pub. Excuse me, it's Friday, it's September 22nd. It's about 7:53 in the morning. The market's going to gear up to open up in an hour and 37 minutes to be exact with you. Boy, oh boy, after this week, I feel like the market baboomed us, I'm wearing my Friday baboom shirt. Folks, make sure to subscribe to these videos. Go to the YouTube Roger-Scott YouTube channel, hit the like button, hit the bell button so you can get notified when I post them first thing in the morning. Don't forget to join my VIP room today at 11 a.m. Eastern time. Don't miss out. I'll cover our positions. I'll give hot stocks. We've been on a tear in that VIP room, I tell you. If you don't know where the link is, you can find it above or below this video. And lastly, subscribe to our Telegram channel. I'm posting trade ideas. I'm posting free trades, setup lists, pictures of my assistants, the furry ones. Go to rogerscott.com/Telegram. All the instructions are laid out for you. All right, now I'm going to give you a morning preview, and I'm going to also give you an update for the weekly options income program because boy, oh boy, Murphy's Law, when you start a new program, the market always dumps. We got to remember that from now on. Take advantage of that. Every time I launch a new program, Bargain Hunter, Code Breaker, Celeste, the Celeste program, the Celeste Monday turnaround program, every program starts out with a market dump, but they're all doing really well right now. That's the most important part. All right, let's stop my ranting and let's get into the market action. So Nasdaq 100, we're up right now. We are breaking a 3-day meltdown that we've had in the stock market because folks finally realized that the Fed means business. The Fed is going, folks, I'm going to explain this to you. We are going to have rates slightly higher. They are going to be here for longer than we think. Every time we get some good news, people think it's over, it's over, it's over. It's not. It never lasts as long as it should. It's always lasting longer. Always unexpected surprises come around. And right now, as we'll get into global sentiment, finally China's doing something good, but we got a lot of global trouble. Europe isn't doing all that great. China's not doing well, and we don't really know how well China's doing. But we got to be able to be flexible, and we have to be adjustable. Now, we have the PMI. This is the Producers Managers Index. They're going to be talking about the manufacturing output and service output. Now, this comes today about 15 minutes after the opening bell, and it could be instrumental, but I do believe the market's going to push back today and give us some upside, and I'll explain to you why in just a second. First of all, the S&P, and let me just add a study here real quick here. Let me go to my relative strength index. Let me put it on 5 days. There we go. You can see right here, the stock market, this price area is extremely oversold. Really, really oversold. Matter of fact, we haven't been this oversold in, let me just take a quick look here. Wow, we haven't been this oversold since right here, since 2022. So this is a real oversold price level. Now, does it mean we can't go lower? Of course we can go lower. I mean, these things are not foolproof. They're momentum indicators. But the fact that it's turned higher is a very positive sign. Also, we have very strong support at this level. Now, I'm not happy about the fact that the support level is below the 100-day moving average. That's not making me happy. But we do have some pretty strong support, 3 levels of support. If you look at the QQQ, you will see similar. And the QQQ is actually closer to the 100-day moving average. Now, again, it's not ideal that we're below the 100-day moving average, but I think with this level of support, we're going to bounce off of that. And also, look at the RSI. I mean, this is really overdone. We haven't been this oversold in the short term. I mean, this is pretty nasty. And with the gap, I mean, in the indexes, doesn't happen very often. So let me just show you the Dow here. They're all sitting on these levels. Right there, right near the 100-day moving average and above the 200-day. Now, volume has been higher the last few days to the downside. That's not good either. If you look at SMH, the semiconductor index, it's also not doing well. And the fact that we're coming off of a lower high across all the indices is not positive as well. But as you can see here, stocks are really oversold right now. And the odds are we're going to have a bounce before going higher. So before I continue this, let me talk a little bit about Carvana. It's a position that we have in the weekly options program, and I just want to give you an idea to explain to you why I've been so short to sell it. to liquidate it, not sell it. So the stock, this asset is actually outperforming the market, as you could see here. It's not below the 100-day moving average. It's above. It's barely off of the 50-day moving average. Also, it came out of an area that didn't make a lower high, but it made a similar high, which is a pretty good sign and leads us more to a choppier environment. It's been outperforming the market yesterday. It really wanted to go higher. I was watching it like tick by tick yesterday. It wanted to go higher. And if we can get above the 45 level before next Friday, we can liquidate it at a profit. So I think the market's going to bounce higher. I think it's going to bounce higher because I think this is a pivot. If the market gives up today, I'm going to liquidate it by the end of the day. But if the market holds up, I may hold it. Now, we're not supposed to. We're supposed to liquidate it today. But in light of this 20% sell-off in the stock in the last 4 days, which doesn't happen very often, and the fact that it's really oversold here, would lead me to hold it. Now, I wouldn't usually do that, but we got to be reasonable and we got to play the cards we're dealt. And the option doesn't expire till next Friday. So if it can get over 45 and stay over 45 by next Friday, we're clear. I'm willing to give it another day, especially if the market turns higher today and if this stock outperforms the market. If the stock market's moving higher and the stock is underperforming the market, I'm out. If the stock market goes down and this stock goes with it, I'm out. If we have a similar event to yesterday, I'm out. I want to make sure we're all on the same page here. But if I see that this stock can rally up a little bit, I'm not worried about NVIDIA because that has a month to go. I'm pretty confident we'll get a reasonable bounce within a month. But right here, I think this thing wants to go above, and that's why I sold it right at this really strong support level, the 45. That's where I did our short. So that, and this is a learning exercise if you're not even in the program or if you don't have the 40-45 spread, which is what we have. But I believe this is going to go higher. And if we can get back to the 8-day EMA, or if we can outperform the market, or if we can get a bump today, that's a green light to hold. And I don't want to cut our nose ahead of time just for the sake of it. So if you're not in this position, that's a good learning exercise for you. If you're in this position, I want you to understand I'm watching it very closely, and I don't want to liquidate it just because today's Friday and those are the rules. If this thing can go higher, we can save ourselves a lot of money. So I wanted to make sure you guys understand that. Now, looking at the stocks and the sectors that have been rallying last few days, this is the weekly. So this just tells us what's been going on this week. As you could see, healthcare's leading. Blue chips, utilities, consumer staples, financial, industrial. Blue chips are starting to lead, especially the last few days. And to the downside, communication, mid caps, speculative right here. S&P has a lot of tech. Energy hasn't been doing great. Russell, technology, retail, material, QQQ, home builders. So right now, the blue chips, the healthcare, the Dow, the utilities, the consumer staple, the defensive stocks are making a run up. Although, if you look at it on a 3-week basis, energy's still number one. And you still have the Dow, but the technology's a little higher up. It's in the middle and not lower. Look at Invesco QQQ, it's right here. But if you look at it right here, you will see that it's all the way down here, went from here to here within the last few days. So you can get a pretty good idea by looking at the last 3 weeks and the last week of where things are. But right now, the last few days, we are definitely, unequivocally, not favoring consumer discretionary, not favoring real estate, not favoring home builders. Matter of fact, XHB, let's take a quick look at home builders. Yeah, they broke down yesterday, and this does not look good at all. This looks bad, and this is below all the support levels. If I see something like that today on the QQQ, it's not going to be good. Just want to give you an example. See, look at the QQQ right now. See that? Now look at home builders. If we see something like that, not holding that position anymore. I'm out. This is really bearish, but I'm not seeing that, but we are on home builders. Semiconductors, we're not seeing that either, but we're seeing it on home builders. So really got to be careful, and just wanted to kind of show you where things are. Also, the PMI today can give us a boost or it can give us a detraction. We're having a pretty good tailwind from China, which is really positive today, and we've been beaten down. Sorry if this video is a little longer than usual, but I've got a lot to say today. So let's go through the fundamentals, kind of back into everything, and then I'll give you a day trade stock for today. That's right, because it's a ba-boom week, and boy, I could use this weekend. U.S. benchmark indices finished the regular session in the red as the latest data on the labor market reinforced the case of the Fed stance of holding rates for higher for longer, which, folks, we should have. I mean, I don't know what people are thinking. Every time they see a sign of something good happening, they think things are over. We're going to turn around. It doesn't work that way. The fundamentals, economy just doesn't work day to day. S&P and the Nasdaq 1 month low. 1 month low is typically in a reversion to the mean market tends to come up. The Dow is at a 3.5 week low. It's holding up better, which we just confirmed by looking at internals. Rate-sensitive mega-cap stocks retreated after the 10-year note climbed to a 16-year high. This is what I was talking about yesterday. Well, not yesterday, last few days, right here, this breakdown. Remember, I said we're much more likely to break down than come back up. Following the trend works, folks. Economic data on Thursday showed that U.S. Philly Fed Outlook survey came in negative, weaker than expected. August existing home sales, I could tell you without just looking at the chart, came out awful, weaker than expected. And that's obvious. Interest rates are going higher. Now, unexpectedly, jobless claims fell to a 7.5-month low. We still have stability in the job market, which is why the Fed can have the green light to go a little further. Former St. Louis Federal Fed president, not reserve, federal Fed, former St. Louis Fed president, Bullard said Thursday the central bank might need to raise interest rates further and maintain them at an elevated level to mitigate potential risk of reacceleration of inflation. I couldn't agree with him more. It's just where we are. I mean, it's not good, it's not bad, it's just where we are. There's a 26% chance we're going to raise rates in November and a 38 chance. This went from 30 to 38 chance in December. I foresee this number possibly getting higher before getting lower. Not sure about November. I'd have a big question mark on November. I don't think they're going to do anything in November. I think if they are, it's going to be December, and I think they will do something in December. Today, we're going to be looking at the PMI. It's going to tell us if the output right here, the manufacturing and service, is on par. I mean, we're not looking at anything crazy here. The consensus is actually on the low side. I'd love for these numbers to be higher so that we can generate some more upside. Bonds are not doing well. Europe is down, not a lot, but down. Concerns over higher for longer interest rates. Construction and automobile led the decline on Friday. Very interesting. While mining stocks are outperforming. Survey released on Friday indicated that the Eurozone economy is expected to decline in the third quarter and may not rebound anytime soon. That's not going to give us any tailwind. China closed sharply higher. That's great. Bouncing off a 10-month low. On hopes of improving growth, but the ongoing trend of foreign capital outflows, especially in the real estate market there, for 7 consecutive weeks underscored lingering economic and geopolitical apprehension related to the country. Most sectors in China climbed on Friday. We get a little bit of a tailwind. Japan, boy, I feel bad for them, trimming some early losses following the Bank of Japan's decision to maintain its ultra-dovish policy without making any alterations. Folks, it's time to raise rates. The Bank of Japan held interest rates, its 10-year yield target, and forward guidance unchanged while repeatedly pledging to keep ultra-loose monetary policy as long as necessary to maintain the target in a stable manner. Folks, you're going to keep doing that. You're going to be in a recession another 20 years. You need to spruce up your economy. But they all know this. I thought they were going to change positions, but maybe they're really fearful the global economy is slowing down to a point where they can't. Wayfair climbed, Charter gained. I called out Charter a little bit ago. I've been calling stocks out like crazy. Day trading stock for today. So take a look at CGN. Now, this is a biotech. I'm not big on biotechs, but take a look at this stock. This is a 3-year chart of the stock on a weekly basis. This is a 5-year stock. Look at what the stock is doing. It's making an all-time high, and volume is better than expected. And it's up 7 points today. Well, and there's no sellers coming in. It's all overhead. Now, we could come back down. Here's what you do. Notice overnight the stock did not linger or come down at all. That's a really strong sign. Don't trade the first half hour of the day. If at 10 a.m. Eastern time, the stock starts taking out its high, right now that high is, 215. So if it starts trading at 215.15, 215.20, 215.25, right here, after 10 a.m., go long. Do not do it beforehand because the odds are it can open up and then just start coming right back down. I want to see the stock bid up in the first half hour. Don't go, well, it's up already 4% and can't go higher. Yeah, it can. It can. For example, look at this stock. Couldn't go higher, right? I know somebody who didn't think it was going to go higher right here, and we're now here. So again, don't play the can't go higher game. Everything is looking really good on the stock, but wait for the first half hour and wait for it to trade above 215 at a good rate. Now, before I let you go, and please, please, please watch your Telegram channel. I'll give you updates intraday on that god darn it Carvana position. Boy, I'm going to have nightmares about it. Haven't been sleeping well as a result. I've been sleeping okay. Folks, before we let you go, make sure to watch these videos, and there's a link for you in the channel and above and below this video. Apple is one of the biggest, most iconic companies and most widely held and traded stocks on the entire planet. And Micah Lamar just discovered a brand new way to play it called the perfect income trade. Now, you probably guessed already that this is an income strategy, but it's far more aggressive than others. Ooh. And it has a 75% success rate on over 80 income opportunities on Apple historically. I love that. If everything goes as planned, and you see how this week goes out, sometimes things don't go as planned, but notice we always have your back, and I'm not turning away from it. I'm literally on this stock like 50 times a day. When things go bad, we're here for you. And if everything goes as planned, you can target $672 per week on average with a $2,500 investment. I like this. Click on the link below and learn about it at 4 p.m. Eastern time today. That's great. Afternoon on Friday at 4 p.m. Take off work early. And folks, if you have any questions, any comments, any concerns, send me an email. Roger, not about customer service issues, please, not refunds or exchanges or credits, trading issues. If you have trading questions, roger@rogerscott.com, roger@rogerscott.com. If you have any questions about Carvana, roger@rogerscott.com, and I'll be posting updates on Telegram. Don't miss out on Micah Lamar. This guy's hot. This guy he's all about Apple. Apple. You got to check it out. Friday, 4 p.m. Eastern time, link above or below this video. And have a wonderful, wonderful weekend. I'm testing out some new software today. I'll give you some updates maybe Monday or Tuesday. Very exciting stuff.